Welcome to your daily stock market summary from MarketSnap. Hey everyone, buckle up because today's market action was a wild ride. We've got a lot to unpack with geopolitical tensions shaking things up big time, major indexes taking a hit, and some standout movers in the large cap space. Plus, we'll dive into key earnings and sector trends to keep you ahead of the game for your long-term investment strategy. Let's jump right in. First up, the major indexes are feeling the heat today as uncertainty around the escalating U.S.-Iran conflict rattles investor confidence. The Dow Jones plunged over 1,000 points, a drop of about 2.3%, while the S&P 500 and NASDAQ weren't far behind, shedding around 2.1% and 2.2% respectively. The Russell 2000 also took a beating, down nearly 1.8%. Wall Street's fear gauge, the VIX, spiked almost 10%, signaling heightened volatility. It's a classic flight to safety moment as markets grapple with the potential for sustained disruptions, especially in energy supplies. Zooming out to the broader economic picture, the big story driving today's sell-off is the intensifying conflict in the Middle East. Iran's move to close the Strait of Hormuz has sent oil prices soaring, with crude jumping past $83 a barrel, a level we haven't seen in over a year. This is stoking fears of a secondary inflation wave, reminiscent of past energy shocks. On top of that, there's a split at the Federal Reserve on rate cuts. Doves are pushing for more easing this year, but hawks are cautious, especially with geopolitical risks clouding the inflation outlook. For long-term investors, this means keeping an eye on how energy prices could pressure consumer spending and corporate margins in the months ahead. Now, let's spotlight some of the day's winners in the large-cap arena. Despite the broader market downturn, a few names managed to shine. Target Corporation surged nearly 7%, likely buoyed by better-than-expected quarterly results even amidst cautious consumer spending. Workday also caught a nice tailwind, up over 7%, as investors seem to favor certain tech plays with strong fundamentals. Palo Alto Networks and Adobe rounded out the gainers with solid increases around 4% each, showing resilience in cybersecurity and software amid the chaos. These pockets of strength remind us that even in turbulent times, quality companies can offer opportunities for long-term portfolios. On the flip side, the losers list paints a stark picture of today's risk-off sentiment. Micron Technology led the declines, dropping nearly 8%, as fears of economic slowdowns tied to the Iran conflict weigh on semiconductor demand expectations. Other chip-related names like Lam Research and KLA Corporation weren't spared, each down around 6%. Newmont Corporation and Agnico Eagle Mines also took hits, both falling over 7%, as gold prices retreated despite initial safe haven buying. For long-term investors, these dips could be worth watching. Volatility often creates entry points in fundamentally sound companies, but patience is key. Looking at the market movers by trading activity, Nvidia remains a focal point, though it slipped about 1.3% today amidst the broader tech pullback. Palantir Technologies bucked the trend with a modest gain of 1.4%, possibly on defense-related optimism given the geopolitical backdrop. Intel, however, wasn't as lucky, sliding over 5% as macro pressures hit hard. These names continue to dominate attention, and for long-term players, they're a reminder to focus on innovation-driven sectors even when short-term noise kicks in. Diving into the most active stocks by volume, we see familiar heavyweights leading the charge. Nvidia again tops the list, reflecting its central role in the AI narrative despite today's dip. Palantir also saw heavy trading, alongside Intel and new holdings, showing how much interest remains in fintech and tech even on down days. Ford Motor Company also made the list, though it dropped over 5%, likely tied to broader cyclical concerns. High volume often signals where sentiment is shifting, so keep these on your radar for potential short-term plays within a long-term framework. Shifting gears to earnings, this week's calendar is packed with names to watch. Today, we had results from companies like Target, which, as I mentioned, posted a nice beat and saw its stock pop. Coming up, we've got heavyweights like Costco, Broadcom, and Viva Systems reporting, which could provide critical insights into consumer trends and tech spending. Sea Limited's recent earnings showed a massive revenue surge for its Shopee and Garena platforms, though it missed on profits, while MongoDB disappointed with its forward guidance, sending shares tumbling over 22%. These mixed signals highlight the importance of looking beyond the headlines to gauge true long-term value during earnings season. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results. Taking a step back to look at the past week's top large-cap performers, Garmin led the pack with a stunning 21% gain, possibly fueled by strong demand for its tech products. Lumentum Holdings and AppLovin also impressed, up around 15% each, showing momentum in tech and digital advertising. Shopify and Occidental Petroleum rounded out the list with gains over 14%, the latter likely boosted by rising oil prices. These weekly movers can signal emerging trends worth considering for long-term positioning, especially in resilient sectors. On the other end, the past week's biggest large-cap losers tell a different story. Genuine Parts Company cratered over 20%, reflecting broader concerns in discretionary spending. Rivian Automotive and Blue Owl Capital each dropped around 14%, hit by sector-specific headwinds and market rotation. Okta and BridgeBio Pharma also saw double-digit declines, underscoring how quickly sentiment can shift. For long-term investors, these pullbacks might be a chance to reassess undervalued names, but timing and fundamentals are everything. Wrapping up with sector performance over the past week, industrials topped the charts with a 2.1% gain, likely driven by infrastructure optimism. Consumer cyclical followed with a 1.6% uptick, showing some consumer resilience. Real estate, basic materials, and consumer defensive each posted modest gains, offering a bit of stability. These sector trends are a good reminder for long-term investors to diversify across industries, especially when macro events like geopolitical conflicts create uneven impacts. On the weaker side, healthcare lagged with a 0.6% decline over the week, possibly tied to profit-taking or policy concerns. Utilities and financial services also edged lower, reflecting broader risk aversion. While these sectors underperformed recently, they often hold defensive qualities that can anchor a portfolio over the long haul, especially in uncertain times like these. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and remember to stay engaged with our daily updates and in-depth SWOT analyses to keep your investment game strong. Whether you're navigating short-term volatility or building for the future, we've got the insights to help you make informed decisions. See you tomorrow for more market action.